Your accountant might be costing you thousands of dollars every year. And the worst part? You probably have no idea it's happening. In the next 8 minutes, I'm going to show you 7 warning signs that your accountant is falling short, what a good tax professional should actually be doing for you, and exactly how to find better support without overpaying. Note, this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancers Wealth Blueprint, where we turn complex financial concepts into clear action steps for freelancers and gig workers. If that sounds helpful, hit subscribe. We drop new videos every week. Let me start with a story that might sound familiar. One freelancer's previous accountant neglected to recommend the pass-through entity election, costing them approximately $86,000 over 2 years. $86,000. That's the kind of negligence that happens when a CPA isn't aware of tax changes or isn't willing to do their best work. So how do you know if your accountant is actually helping you or quietly costing you money? Here are 7 warning signs. Warning sign number 1. You only hear from them once a year. The most reputable, client-focused accountants will schedule regular tax planning meetings, quarterly at minimum, to keep your strategy nimble and comprehensive. If your accountant only contacts you at tax time to collect your documents, that's a problem. Tax planning is not a once-a-year event. It's an ongoing process. A good accountant should be helping you make strategic decisions throughout the year, like timing large purchases, adjusting estimated payments, or restructuring your business for tax efficiency. Warning sign number 2. They can't explain things clearly. Ask your accountant to explain a complex financial topic in your industry. Pay attention to how they answer. Do they break it down in an easy-to-understand way, or do they hide behind jargon? If your accountant can't explain why they're recommending something in plain English, that's a red flag. Either they don't fully understand it themselves, or they're not invested in making sure you understand your own finances. Warning sign number 3. They're not proactive about tax savings. A great accountant doesn't just file your return. They actively look for ways to reduce your tax burden. They should be asking questions like, have you considered a solo 401k? Are you maximizing your home office deduction? Would an S-Corp election make sense at your income level? If you're always the one bringing up tax strategies you found online, and your accountant just says, sure, we can do that, they're being reactive instead of proactive. You're paying for expertise. You should get it. Warning sign number 4. They charge based on your refund. A sure sign that your accountant is shady is that they base your tax prep fee on the size of your refund. This arrangement gives your accountant an incentive to fudge the numbers so you get a bigger refund. Reputable accountants charge flat fees or hourly rates based on the complexity of your return, not based on how much money they can squeeze out of the IRS for you. Warning sign number 5. They discourage good record keeping. A good accountant encourages you to save receipts, maintain documentation, and keep organized records. If your accountant doesn't seem interested in good records or tells you not to worry about tracking things, be very careful. Proper documentation protects you in an audit. An accountant who doesn't emphasize this is either lazy or setting you up for problems down the road. Warning sign number 6. They gossip about other clients. One of the first warning signs that you should not trust an accountant is a lack of discretion over other clients' business and financial statements. If they're mentioning names or financial details of their other clients, your information won't stay private for long either. This is a fundamental ethics violation. Walk away immediately. Warning sign number 7. They miss deadlines or make frequent errors. This should be obvious, but it's surprisingly common. Missed deadlines mean penalties. Errors on your return mean potential audits or amended filings. If your accountant has missed a deadline or made a significant error, that's a serious problem. Once might be forgivable. Twice means it's time to find someone new. So what should a good accountant actually do for you? First, they should help with quarterly estimated taxes. As a freelancer, you're required to pay taxes 4 times a year. A good accountant calculates these payments accurately so you're not overpaying or underpaying. Second, they should provide strategic tax planning. This means looking at your full financial picture and recommending strategies like retirement account contributions, business structure changes, and timing of income and expenses. Third, they should be available when you need them, not just at tax time. If you have a question in July about a large purchase or a new client contract, you should be able to get guidance. Fourth, they should represent you if you get audited. Ask upfront, if I get audited, will you represent me? This is a critical service and not all preparers offer it. Now let's talk about cost. What should you expect to pay? For a combined personal and business return done by a CPA, the total cost typically ranges from $1,250 to $3,450, depending on complexity. Returns involving self-employment specifically range from $300 to $800. CPAs typically charge $200 to $450 per hour for their services. Geography matters too. CPAs in major cities like New York or San Francisco typically charge 20 to 30% more than those in smaller markets. If someone is charging significantly below these ranges, ask why. They might be cutting corners. If they're charging way above without justifying the cost, shop around. How do you find a good accountant? Step 1. Get referrals. Ask other freelancers and small business owners who they use. Personal recommendations are the best starting point. Step 2. Verify credentials. The IRS requires tax preparers to register and have a preparer tax identification number, called a PTIN. You can search the IRS Return Preparer Office directory to verify. Also check with your state's Board of Accountancy to confirm their CPA license is active. Step 3. Do a consultation. Most accountants offer a free initial consultation. Use this to ask questions like, do you have experience with freelancers and self-employed clients? How often will we communicate? What's included in your fee? Will you help with quarterly estimated taxes? Step 4. Test their communication. Ask them to explain something complex. See if they can break it down clearly. This tells you a lot about how the relationship will work. Here's my final advice. Your accountant should feel like a partner in your business success, not just someone who files paperwork once a year. If you're not getting proactive advice, clear communication, and genuine expertise, you're leaving money on the table. Don't be afraid to switch. Yes, it takes some effort to find a new accountant and transfer your records. But if your current accountant is costing you thousands in missed opportunities, that effort pays for itself many times over. That's the breakdown on finding better accounting support. If you found this helpful, hit subscribe for more freelance finance content. As always, this is educational content, not financial advice. Your situation is unique, so do your own research before making changes. See you in the next one.